Is Snowflake stock a buy now? I've been a bull about Snowflake as a long-term story since before the IPO. And really before that, I'm a huge fan of Frank Slootman. If you know Frank's background, you know that he absolutely crushed it with Scarpelli at ServiceNow. And coming from the software industry myself, one of the things I really like about Frank Slootman, he's very sales-driven. I believe that sales-driven organizations are best for software. Now, of course, the product has to be good too, but you need to have that sales-driven mentality from the top down. So when Snowflake reported earnings in late February, well, the news wasn't good. First of all, Frank Slootman leaving as CEO. Secondly, weak guidance. And the combination of those two things put a lot of pressure and negative sentiment on the stock. Additionally, the stock has always carried a high premium, has been very expensive, has other issues like stock-based compensation. So when the earnings came out, it was a beat on the top and bottom lines. You can see the numbers here. Q4 non-GAAP EPS 35 cents, beat by 17 cents. That's solid. Revenue of $774.6 million. That's up 31.5% year over year, beat by about 14.38 million. So what's the problem? Well, not only the Slootman factor, but also guidance issues. Looking to fiscal 2025, product revenue is expected to rise 22% year over year to roughly 3.25 billion, well below the 38% increase seen in fiscal 2024. So you have an expensive stock that's been growing rapidly. You've got other issues to consider, such as Slootman, stock-based compensation, competition from Databricks, and more. And all of a sudden, you've got 22% revenue growth when you were seeing much higher numbers. And the valuation, of course, was carrying a premium. So the very next morning, early in the morning, I came out with a deep dive due diligence write-up. So I shared my initial thoughts, a bunch of information, and then my final thoughts and conclusion. And I said back on February 29th, we've been saying $150 or less DCA for as long as we've covered Snowflake. We said don't overpay for the stock. And even though I knew the new CEO had an impressive resume, I needed to explore more. I had to dig more. I had to spend some time on this. So if you don't know Ramaswamy, the new CEO for Snowflake, he came from Google and he helped grow AdWords, Google's advertising business, from 1.5 billion to over $100 billion. And he was the growth driver behind Google's advertising business. He was there for 15 years. So he went on to a company called Neva, and Snowflake acquired Neva in May of 2023. And the reason that Snowflake acquired Neva is to accelerate search in the data cloud through generative AI. If you understand Snowflake and what it does and what the vision of the company is for the future, well, the bottom line here, guys, Ramaswamy makes a lot of sense. He's a technologist. Now, he doesn't have the sales resume as someone like Slootman, but he does speak well. And he does a good job really at both sides. Of course, I had to research this and it's taken me some time. I've spent a month looking at this closer, but I knew the stock was going to come lower. When earnings first came out, the stock dropped 20%. It was down to 185. It got down to even like 175. And at that point, people were buying it saying, why don't you want to buy more shares? And I said, $150 or less DCA. And people would ask me to cover Snowflake when it was over $200 a share. It got to 227. And I kept telling them, I've said many times, $150 or less DCA. Now, of course, a lot of people thought I was crazy saying that when it was $227 a share and it looked like it was going to 250 and beyond. But now you have this big drop, you have this gap down. You can see it got to $151.49. And just a day or two ago, it got down to $152 and change. So this stock is really trying to hold that $150 level. Now, we will have earnings coming up, and it won't be for a couple more months. But one thing we have to look at is the guidance. Now, let's think about this for a second. I come from software sales. And if you know anything about software sales, you know they have to be a good sandbagger. Now, understanding Frank Slootman and following him for years, it's going to be very hard for you to convince me that there's not some sandbagging going on here with that guidance. And listen to this clip to give some more clarity.
Because the future is super compelling to us.
Okay, Sridhar, this has historically been, there is a seasonality to your business. I'm hoping maybe it gets unseasonal, so to speak. This quarter has not been always the best of your quarters. Can that change? I mean, I don't really understand why it's seasonal. Maybe you can explain that.
I mean, holidays are always tricky. There was almost like an extended 2+ week holiday this year. And in spite of that, we came in pretty well with Q4. And then in terms of guidance, it's based on historical consumption data. And as we know, the last 2 years have been tumultuous. We've also rated last year more than sort of previous years. But we have a ton of stuff that's going to be hitting GA, everything in AI, but also like transactional stores, and applications on Snowflake. So there's a lot of upside there. But the forecast is conservative.
Okay, so I told you that I thought Snowflake was being conservative, and then you just heard it from the new CEO right from the horse's mouth. What's the valuation of this stock right now, and is it a buy at these levels? All right, so if you've been following Snowflake for a while, you know that for the longest time, it carried the highest premium when you look at cloud and SaaS names. It was well over a 20x EV NTM revenue. It went from that top spot to now number 6. And that EV NTM revenue, which is well above 20, is now at 15.6x. For comparison, something like Cloudflare is hanging around a 20x, and Palantir is around a 19x. CrowdStrike's also a 19x. Samsara is around a 17x. Datadog around a 16x. Now, Snowflake does have high stock-based compensation, SBC, and it's something they need to rein that in. But the free cash flow numbers are very positive. In fact, it's rocking around a 30%. Palantir and CrowdStrike are around 32%, so this is number 3 on the list that I follow. The only other one that comes to mind that might be higher is something like a Viva, and that's around 40% free cash flow percentage. And I'm talking about free cash flow margin percentage, to be clear. Now, the rule of 40 for Snowflake is still above 60%, and that's higher than names like Cloudflare, Palantir, and Datadog. CrowdStrike, for reference, is around 65%. And the net dollar retention for Snowflake used to be off the charts, like 170%. And that has come down significantly. Profitability, it gets an A- on Seeking Alpha. That's about a 68% for the gross profit margin TTM. Now, the growth has accelerated. You saw 35.86% year-over-year growth. The forward here on Seeking Alpha is 27.14%, but earlier we also showed 22%. So this estimate's ranging really between 22 and 27%. Now, this company is not profitable, so it does not have a PE ratio, but it does have a PE non-GAAP forward PE ratio of 160. Of course, it's expensive. And the price of sales is 14.89. So if you're a value investor, this is definitely not your huckleberry.
I'm your huckleberry.
But why am I bullish on Snowflake long term? I believe that this is a strong AI player for generative AI, especially when you think of enterprise in the future. When you look at artificial intelligence in that cycle, companies like Snowflake aren't benefiting from AI yet, but it will, and it'll take time. And if you listen to the CEO talk in a couple different interviews, he talks about as soon as the back half of 2024, they'll start recognizing some revenue from AI. If you follow the channel, you remember a video I did with Jensen Huang and Frank Slootman talking about the partnership between Nvidia and Snowflake. This was a very powerful interview, and it paints a great picture of the future for Snowflake.
What did you say? What was the last part?
The question is, like, there's a bunch of cloud providers out there who are vying for your ML or your AI workload business. Like, why NVIDIA and Snowflake?
Well, we're the best.
It's a good answer. Yes.
And we're gonna come to a theater near you and prove it, of course, and prove us in the pudding. We always aim for outcomes, your outcomes, not ours, yours, right? And that we're going to leave it all in the field. I mean, this is I find this the most interesting time to be alive, in this business, because the ability to aim for superlative outcomes is there now. That for a long time, we talk about data warehousing. It used to be begging for a 2:30 a.m. time slot 3 months from now. That was the state of the business, and look at where we are now. It's just unbelievable, right? The types of problems that we're talking about now. So it's
shipping an intelligent application in days and weeks.
Yeah, I think not everybody realizes how much intelligence is embedded in the data that they look at every day. How much there is to be unlocked, in insights and impact. So that's where we all going to come in and make that happen.
Sarah, there's a reason that everybody is in Snowflake. There's a reason for that. Because this is the safest, best place to store your data, to process your data. And so for everybody who's in Snowflake, we are your best answer. And for the very first time, if you data warehouse, we're going to connect an AI factory next to it. And you're going to be producing intelligence, the most valuable commodity the world's ever produced. You are sitting on a gold mine of natural resources, your company's data, proprietary data. We're now going to connect it to an AI engine. And you're going to, on the other end of that, is just intelligence spewing out every single day. Unbelievable amounts of intelligence coming out the other end, even while you sleep. This is the best thing ever. So if you're a Snowflake customer, as many are, Frank and I are going to help you turn your data into intelligence.
So is Snowflake a buy or not right now? Today it's trading at $155 a share. We saw it get down to $151.49. Like I said earlier, it's trying to hold that $150 level. I still think if it's below $150 DCA, and I think you can do that with confidence. Not everybody's going to agree, but I'll also tell you that those people that don't agree, I can assure you they don't know the company as well as I do. Now, this is not a trade. This is a long-term story. So if you're investing, I'm talking about 3, 4, 5 years and beyond. So I like the stock at this $150 level, maybe slightly higher. I prefer it $150 or less DCA as a long-term investment. If this is helpful, make sure you subscribe to the channel, click that bell for notifications, drop me a like, drop me a comment. Have a great rest of your day. Take care.